Hello there, everybody. Welcome to Always Off Rant, special edition, special. I should have that. Scotty O's Q2 Amazon earnings recap rant. Is that what we're going to call it? I don't know. We just try to have a little satirical fun here with the kids down over at Amazon. Q2 earnings for 2025. So we just try and make it real fun for you. You know what I'm saying? So let's. I'm going to try and cut this up for you. Spoiler alert. This is just ridiculous. They had a great quarter, kids, but Wall Street's pissed. Okay, they're not happy. They're pouting. It's just ridiculous. More on that. Let's get into it, shall we? Here we go. Okay, Andy. I call him Andrew Jesse to start it off.
Thanks, Dave. Today we're reporting $167.7 billion in revenue, up 12% year over year, excluding the impact from foreign exchange rates. Operating income was $19.2 billion, up 31% year over year, and trailing 12-month free cash flow was $18.2 billion.
You know, this should just piss some people off. I'm going to start out hot, okay? I'm going to start out hot. Welcome to the Scotty O Rant. He's up 12%. The Department of Commerce came out with retail the first half of the year. Shockingly, was up 3.8 core retail. These guys are hitting 12%, but more insulting to the world and to the vendors and sellers and everybody else, their operating income was up 32%. Did I hear that right, Andy? Did I hear that right? Come on. I mean, this is just getting ugly. Come on.
We saw good progress across our various customer experiences and businesses this past quarter. Starting with stores, we feel good about both the inputs and outputs of the business. At Amazon,
they think about inputs and outputs, okay? If you weren't convinced they're not human beings, inputs and outputs, that's what they run the business on.
Think of our business in terms of inputs and outputs. Outputs are metrics like revenue or operating margin, but of course, you can't manage at the output level. It's the inputs that drive the outputs.
Can't you manage on the outputs? I think we all actually there's either happiness or sadness on the outputs. I'm pretty much judged by the outputs. I don't know about you. I don't really have a lot of control on the inputs in certain situations anyway. Okay, we're starting off hot, kids. We're starting off hot. I will swear we're gonna break this down. I'm gonna summarize it like nobody's business. All right, a recap like you've never heard before.
So we spend virtually all of our time internally talking about and goaling against inputs. The inputs that matter most to customers in our stores business are selection, low prices, and speed of delivery.
Oh, and I got a bone to pick with you, Andrew, on that. On the last one, the delivery part. Okay.
We've taken another step forward in selection these past few months, headlined by the much requested return of Nike's products to Amazon's retail store.
Holy shit, I forgot about that. That's why they hit 12%, kids. Because Nike's back. And Nike was really never gone totally, but Nike's back. So that must be, I mean, what do you think that's worth? 1 or 2 points? Maybe 3? I don't know. God, Andy, no wonder you had such a killer quarter.
Added premium brands like Away, Aveda, Marc Jacobs fragrances, and brands from Saks and Amazon like Dolce & Gabbana.
Oh, Dolce & Gabbana.
Etro, Stella McCartney, Rosetta.
Ooh, Stella McCartney, isn't that like a Nordstrom private label athleisure brand? Somebody fact check me on that.
Getty and La Prairie. And we started expanding our very
Well, the funniest part, I'm going to cut to the chase on that. The analyst, of course, at the end of the call, we'll go through a couple questions. Nobody asks about that. Hey, Andy, can you talk to me more about the luxury brands and your deal with Saks and the fact that Nike came back? Nobody asks about that. Nobody, you know why? Because nobody gives one shitola about the fact that they got this stuff back. They don't care. Nobody cares.
Successful perishables pilot, where we offer customers perishables at the point of purchase when they're ordering other items that will be delivered same day from our same-day fulfillment nodes. We're seeing strong customer adoption, as 75% of customers who've used the service this year are first-time shoppers for perishables on Amazon.
Okay. I mean, when the PR crew put this call together, they were running through what they could talk about. I mean, can we talk about the acquisition of the wearables, the AI wearables B or something like that? Can we talk about the fact that we've just dropped $13 billion in spend on Google? Can we talk about I don't know, there's a bunch of other stuff we can talk about. They're like, no, we got to hit the perishables. We got to hit hard on we got to double down on the perishables. I, I didn't even know this was I had no clue about perishables program. I've never heard about this before in my life. I mean, this is just tip the cap. This is a stretch, Andy. I'm gonna cruise by because the perishables, which is great. Can you fix the return problem with your perishables? Okay. Can we figure out how to do returns better and not have just stick it to the sellers and the vendors? Okay. I love the perishables. I'm all in. Congrats.
With 20% of customers who use the service returning multiple times within their first month.
That's great. That's fantastic. And I'm just so happy for you and your perishables. Okay. I really am. I know I'm being sarcastic, but actually that's a cool program and I hope it works. Okay, he goes on about some other stuff, and let's get this is fabulous.
Well-known research firm Profitero.
Oh, research firm. So let me get this straight. You basically don't like any other third-party objective reporting on your stuff, but now this firm, which again, I'm all in.
Has concluded for 8 years in a row that Amazon has the lowest prices of any U.S. retailer. But perhaps
why do they have the lowest prices? Why is their cost to serve so low? I think if you're new here at the quarterly earnings recap rant, it's because of us. It's because of the sellers and the vendors funding all this shit.
The clearest outputs are the rate at which our stores business grew this past quarter and the success we saw in our recent Prime Day event. This year's Prime Day was our biggest ever. With record sales, number of items sold, and number of Prime signups in the 3 weeks leading up to the Prime Day. Customers saved billions of dollars, and independent sellers, most of which are small and medium-sized businesses, saw their best sales performance of any Prime Day event yet.
Oh my God. Oh my God. Well, what were the numbers, Andy? You did 14.1 billion last year. What did you do this year? What are you going to hopefully maybe the Q3, because that happened in Q3. We're going to learn about that. But to this date, and I'm recording this on the 31st of July, there has been no numbers. No, how many Prime members did they get? The number of units. It was just the best ever, which we know is 4 days. I said this, and I have a rant about this, and I don't know when I said this. Whatever. I think it's the worst. I think it's the worst Prime Day ever for a bunch of different reasons that I won't go into. But it just cracked me up. No one's going to tell you any information. It's just the best ever. And we bought more and we sold more and it was great. Yeah, it's so cool, man. Party on, Wayne.
There continues to be a lot of noise about the impact that tariffs will have on retail prices and consumption. Much of it thus far has been wrong and misreported. As we said before,
misreported? Misreported? This is the first of this particular earnings call where Andy just he throws a shot. It's shot across the bow. He gets spicy. He's been spicy before, but he takes a shot on a couple occasions, and this is the first one.
It's impossible to know what will happen.
Is it impossible? No, it's not, Andy. We pay more for all the shit that comes through and we buy on Amazon. It's not hard. It's actually not hard. You just take 20%, 30%, 15%, 10%, whatever. We are going to be paying more. The vendor's paying more, the seller's paying more, and the consumer's going to pay more. It's not really that hard, Andy.
Where will tariffs finally settle, especially China? What happens when we deplete the inventory we forward bought or that our selling partners forward deployed?
How much did they buy? Do you think they bought like 3 years worth? No wonder the FCs, the fulfillment centers, they can't fit anything, and we have capacity constraints. It's because they bought 3 years worth of product. I'm just kidding, but that'd be funny. Kind of, not really.
Answer the tariffs going into effect. If costs end up being higher, who will absorb them?
Oh, God, who will absorb them? You know who's going to absorb them. We all know who's going to absorb them. Who always absorbs them?
But what we can share is what we've seen thus far, which is that through the first half of the year, We haven't yet seen diminishing demand nor prices meaningfully appreciating. We also have such diversity of sellers in our marketplace, over 2 million sellers in total, with differing strategies of whether to pass on higher costs to consumers, that customers are advantaged shopping at Amazon because they're more likely to find lower prices on the items they care about.
Oh, this is Spin Zone like 101, man. Hey, we're good. We're good. Nothing to see here. Put the caution tape up. Nothing to see here, Andrew. No, we're fine. We're fine. We're not really seeing prices go up. We're seeing great demand because there's only like 2 places in the world that people buy anymore, for crying in the night. No, we're fine. Nothing to see here. It's going to be all good, man.
Further improving delivery speed remains a key focus.
Oh, does it?
And we continue to make progress. We've previously shared how
you ain't making progress around my house.
We re-architect our U.S. inbound network into a regional structure.
Well, you need to find a new architect, because this architect, the plans are flawed.
Allowing us to place inventory and ship from locations closer to customers, improving speed and lowering costs.
Okay, you're not improving speed because I keep ordering things and it takes a week. I'm a Prime member. I've been a Prime member for years and years and years. And I keep ordering things and they take a week and a day. They take 6 days. They're taking forever. Some of these things I am ordering are vendor central. They're 1P items. They're sold and shipped by Amazon. I have a gazillion fulfillment centers. I have inbound centers. I have sorting centers. I mean, there's something. I mean, I could get things in an hour and all of a sudden I can't get stunats. I can't get anything.
That work is delivering tangible results.
Is it?
In Q2, we've increased the share of orders moving through direct lanes where packages go straight from fulfillment.
Well, I'm apparently not on my lane. Maybe I've been flagged because of these earning calls recaps. Maybe I'm. Ooh, let's start that conspiracy theory. All right, maybe they've called me out.
Fulfillment delivery without extra stops by over 40% year over year. We've also reduced the average distance packages traveled by 12% and lowered handling touches per unit by nearly 15%. We've made progress on order consolidation.
Okay, they have done a good job that. I'm now getting one box with stuff in it. Okay, I'll give them that. They've changed some packaging things, which again, we've funded. You get the SIP program, all kinds of stuff. Yes, you know what? Like I said, I've given you shout outs for that before. You keep repeating that, which is great. I understand that's a big talking point. So you know what? Good for you. All right, skipping, blah, 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 blah. We did great. It was awesome. He goes into as usual, like a freaking forever diatribe about AWS and Bedrock, and he's got a new toy, which is the agent within AWS for AI developers. He's got a new toy that's pretty fun. Okay, let's get to the big drum roll. Okay, let's get to the Amazon ads. How did they do Amazon ads Q2? You probably, by the time you hear this, you've read it all or whatever. Let's talk about how your ads business, which, by the way, just a friendly reminder once again, it is the highest margin ever.
Moving on to Amazon ads. We're pleased with the strong growth, generating $15.7 billion of revenue in the quarter, growing 22% year over year. We continue to see strength across our broad portfolio of full funnel advertising offerings that in the U.S.
Whoa. Everybody hear that? Everybody let that sink in. 22% growth year over year. They're pleased with the growth. The funniest thing is, Brian Olszewski, he comes on and he's like, it's due to sponsored products in our search. It's really driven by sponsored products. So they did the spring big deal days in Q2, I believe. And, cost per clicks go up a little bit, but it's just fascinating to me that even they're talking full funnel. And I love, we know summer full funnel Jubilee here, but it's still driven by the freaking sponsored products, which is littered all over the place. 22% on a fat number. man, oh man, is that the ad business, they are just loving that because it's pure profit.
Us alone help advertisers reach an average ad-supported audience of more than 300 million across our own properties.
Now that's interesting. He's talking about the demand side, their DSP and their other things. 300 million. That's pretty large. When you compare that, right? So let's just talk about so Netflix is 200 plus million. If you talk North America versus global, it gets bigger than that. But that's why all of these big properties, and that's why Amazon is getting a lot of these content rights, is because their reach is just so massive. That's hard to compete with. I mean, any traditional linear, you can't even touch that.
These are properties like our retail marketplace, Prime Video, Twitch, and Fire TV. In live sports such as NFL, NASCAR, and the NBA, as well as third-party websites and apps. Another area we're excited about is our demand-side platform, or Amazon DSP.
Oh, here's you go. I'm sorry. I screwed that up.
Our DSP enables advertisers to plan, activate, and measure full-funnel investments. Our trillions of proprietary browsing, shopping, and streaming signals paired
trillions
with extensive supply-side relationships and our
relationships. Now that's just, I'm sorry, I've gone too far.
Secure clean rooms provide advertisers the ability to optimize advertising.
Why didn't they get the clean rooms is called Amazon Marketing Cloud. Come on, PR, you got to help my boy out, okay? Clean rooms. I mean, that's what they essentially are, but come on, that doesn't sound good. Nobody excited about clean rooms. It's Amazon Marketing Cloud. It's the A and M and C. Come on, man, let's do better.
Deliver greater precision and drive efficient and effective advertising outcomes. And in June, we announced a momentous partnership with Roku, giving advertisers access to 80 million connected TV households.
That's not small. I mean, I don't even know anybody in my life who has Roku. I'm not throwing shade there. 80 million. That's a big hit. That's good. That is good. Nice job out of you. Again, that's just going to keep more reach, more audience, bigger rate cards, bigger inventory dollars.
The largest authenticated connected TV footprint in the U.S. exclusively through Amazon DSP.
Hey, how's that going, Walmart? How's the Vizio thing going? Okay, you got a little connection with Vizio. I don't know what you're putting on the Vizio because you don't own any content. I'm just compare contrast here. That's all I'm saying.
It's a giant leap forward for advertisers, bringing best-in-class planning, audience precision, and performance to TV advertising. We also announced an integration between Disney's real-time ad exchange and Amazon DSP.
They are building a moat, aren't they? They are building a moat because they have the content, they have the partnership. Now how do we continue to get non-endemic, meaning the advertisers aren't on the platform, on the search, or even on some of their other platforms, even on just how do they broaden to insurance, to services, financial, where all the money is?
This collaboration allows advertisers to gain direct access to Disney's premium inventory across platforms like Disney Plus, ESPN, and Hulu, while allowing them to leverage insights from both companies.
That's super interesting. It's big. That was a big announcement. And then on top of that, right? So he's on they have the Disney exchange, but what's in the works beside that, in my little sports nerddom, is I think it's pretty close. It's not final yet, but the NFL and Disney, like Disney, who owns ESPN, is going to merge and buy NFL media. So that means the NFL Network, that means Red Zone, any sports fans out there. This is just another high intensity, high revenue play by them. And they're just going to get more quiche.
When advertisers work with Amazon, they're not just buying ad space. They're benefiting from exceptional programming, innovative technology, and unrivaled signals, measurement, and audience development that provides strong relevancy for consumers and return on investment for brands.
They are, and there's more and more coming. Now, I have issues with your tech and some other things. You're making great progress, but a lot of this stuff is happening outside of Amazon. But They're constantly getting better.
Moving on to AWS.
Oh God, moving on to AWS. I'm gonna have to skip. I mean, who's interested? Let me see if I can just get this. They're killing it, but they're not killing it enough because he keeps claiming that 85% of companies out there are still on premise and they're not on the cloud. And so the traditional CPU, which is what the big deal before generative AI came, and those are GPUs, they were killing it there. Now they've got Bedrock, they've got all this other stuff, and then they have a new toy.
In Q2, AWS grew 17.5% year over year and now has over a $123 billion annualized revenue run rate.
But people aren't happy with that, Andy. People are pissed. Wall Street Journal came out that you're not keeping up with the Joneses, okay? You're not keeping up with all the other big AI tech companies, NVIDIA, which they partner with. What Google's done. Meta had a phenomenal quarterly earnings. All the other guys are coming up with these huge numbers on AI. The funny part, I think, is, they run all their shit on Amazon AWS. They're using a lot of this stuff to run it. And as soon as they get their own GPUs, so they partner with the NVIDIA chips and the GPUs, the big AI chips, they're making their own chips. All right. And so just like on CPUs, they started saying, and he actually even calls out Intel on this. He's like, oh yeah, we loved Intel and we used those, but then we figured out how to do it ourselves. Yeah. See, then we'll make our own. And what do you know? It costs less and it does more. Yeah, see? And then all of a sudden he took over bye-bye. He took over Intel. Intel's now a teeny tiny portion of it. The same thing's going to happen here.
We continue to help organizations of all sizes accelerate their transition to the cloud, signing new agreements with companies including PepsiCo, Airbnb, Peloton, NASDAQ, London Stock Exchange, Nissan Motor, GitLab, SAP, Warner Brothers Discovery.
All right, a lot of them. They redid, their sales team did a great job and they re-upped contracts. Because, I mean, can you think of that nightmare changing over? I mean, why would you do that? Okay. Tons of AWS. I'm just not the AWS guy. They're killing it. But again, nobody's happy on Wall Street because, in fact, he's asked about it. He's kind of challenged about it. And he's just like, guys, we have a full scope, right? We're working on agents and agents are hard. We have our own agents. We're actually, a lot of people building their agents, agentic AI stuff is actually using our code, using our stuff. So he's working on it. Okay, I lie. I'm going to let him talk a little bit about his little agents.
Allowing organizations to infuse these models with their unique expertise while optimizing for cost and speed. As people have become excited about building agents, they're realizing they lack the tools to build them. In May, we released Strands, an open source way to more easily build agents that's taken off with a wide range of customers with already 2,500 stars on GitHub and over 300,000 downloads on PyPI.
PyPI? Is that Silicon Valley? Is that what was the name of that? Scan? Some marketing's got to do better with these names.
Customers are also struggling with deploying agents into production in a secure and scalable way. It's holding up enterprises scaling agents. To help solve that problem, Bedrock just released Agent Core. Agent Core is a set of building blocks that gives customers the industry's first secure serverless runtime to provide both synchronous and asynchronous execution, agent identity and boundaries, a memory service, a gateway that translates services to MCP.
Okay, I'm so bored right now. I'm so bored. Get through it. Just get through it.
MCP compatible interfaces, built-in code execution and web browser tools, and an observability service.
Love the observability.
Customers are excited about Agent Core, and it frees them up to start deploying agents more expansively.
Okay, go Agent Core.
Third,
wouldn't it be funny if who's the Walmart one? Sparky, is that right? I don't know. Wouldn't it be funny if they're using their stuff to build it?
Starting to see AWS release more powerful applications at the top layer of the AI stack.
Oh, the top layer of the stack. Now you're talking to me, Andrew.
AWS Transform is an AWS agent that dramatically reduces mainframe modernization timelines from years to months, completes VMware to EC2 conversions up to 80 times faster, It makes it simple to move from .NET Windows to .NET Linux implementations, reducing
Thank God Linux to Windows. Jeez.
licensing costs for .NET applications by up to 40%. We've also just released Kiro, our new
Kiro, that's it. I was trying to get to the Kiro. They've launched Kiro, everybody. What does Kiro look like? Is it another dog? I want to see the logo for Kiro. Kiro. What are we doing over there? Can you guys hire like the pharmaceutical guys or something? They come up with really fun names, really funny, funky names. You guys need a better internal marketing firm, better creative. The Kiro, Chiro, Cairo. What are we doing? Come on, man.
agentic integrated development environment coding agent. There's a lot of buzz around Kiro, with several 100,000 developers using or requesting access in the first couple of weeks. 100,000 used in the first 5 days of the preview. What struck a chord for developers is that Kiro allows them to do vibe coding.
Vibe coding. Bro, hey man. It's good vibes, man. Seriously. I'm your little AI Cairo, bro. I'm your Cairo agent, man. Good vibes. Some vibe coding. I'm gonna have to go to Chit Chatty. I'm gonna have to go to chat and find out what vibe coding is. That's fantastic. I could be a coder if we've got vibe coding. This is awesome.
Developers use natural language to chat with a coding agent to build code. But unlike other coding agents, where
Do you think they talk to themselves in their coding? Do you think they just have full conversations with Cairo? Cairo? God, I'm a mess.
developers don't really have any structure to build on top of, Kiro allows developers to use
Kiro. Thank you, Andrew. Kiro, I apologize.
natural language to build a spec and then automatically up.
Okay. It's great. Kiro's great. Phenomenal. Everybody's happy. People love you. Just so I stay true to my sports. He goes into a whole thing about NASCAR. They had NASCAR for the first time, and actually they delivered a 2 million average per race, plus the lowest demographic, which is exactly what all these guys want. Then he talks about this fall coming in, their big deal with NBA. They hired all their greatest talent, and you know what? They did a great job on the talent. So he goes over that. Now we're going to get to Brian, the CFO, Olszewski, and he's gonna talk about it again. He's just gonna say one more time. I mean, he's honestly like kind of mansplaining how much they kicked ass again. I don't know. That's probably not the right way to say it, but he just goes over the numbers again of how just they obliterated everybody. Oh, and then he talks again. He did this in the Q1 earnings about James Bond. Ding, 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 ding. How they've hired the director, and they're working on it. So I'm excited about that. I mean, I don't care who they have or whatever. I'm fired up. I'm a Bond guy. I keep saying I'm going ahead, and we're already well into this, but he kind of glosses over these huge things. Amazon Pharmacy has grown 50% year over year and is just killing it. Amazon Pharmacy to me is like I don't know, it's a dark horse. It's just kind of like a sneaky killer. It's like a sniper hanging out there. That's huge. I don't know if they're making any money on that, but that's going to be big. Okay, I swear we're going to get to Olszewski. We're going to get to all the other stuff. Here's Brian.
Thanks, Andy. Let's start with our top line financial results. Worldwide revenue was $167.7 billion, a 12% increase year over year, excluding the impact of foreign exchange. Foreign exchange had a $1.5 billion favorable impact to revenue in the quarter, as foreign currencies generally strengthened versus the US dollar. As a reminder, our Q2 revenue guidance had anticipated an unfavorable impact of approximately 10 basis points or $100 million.
That's again, I love these tiny little, I don't know, these accounting, blips that are like such huge dollars. It's like, man, you're walking down the street and you found $100 million.
Net operating income was $19.2 billion, which was $1.7 billion above the high end of our guidance range.
$1.7 billion above their guidance range. You think they're not making some cake?
Across our segments, we continue to prioritize cost-effective innovation that delivers value for our customers. In the North America segment, second quarter revenue was $100.1 billion, an increase of 11% year over year.
Okay, so North America, 11%, global overall 12%, and this is pretty consistent, 11%, 11%. Their operating revenue is through the roof. Their free cash flow is through the roof. They're also, which he doesn't say, they just saved themselves, umpteen $1 billion on Google ads. So, put that back in the kitty. We're going to move on. Brian talks about all the great stuff and their cost to serve and robotics, automation, and blah, blah.
International segment revenue was $36.8 billion, an increase of 11% year over year.
Yeah, so international is 11%, and they're making money.
Excluding the impact of foreign exchange. Worldwide paid units grew 12% year over year. We remain
12%.
focused on inputs that matter most to our customers. In the second quarter, we saw broad-based strength across our key performance metrics. This includes sharp pricing and more in-stock availability.
More in-stock availability. That's comical too. Okay, we're getting up on time here, so I got to move it along, little doggy. We'll go to questions. I think we should go straight to questions. None of them really that great. They're all AWS questions, all of them. Not one of them. Oh, they talk about Alexa Plus, which is honestly nice job out of them. Actually, they pulled it together. I've heard great reviews. Scott Wingo, Jason Goldberg, the Jason Scott show, highly recommended. They actually are testing them, and they thought they were really excited about the progress. And so it's a really good chat bot. It's a really good thing. And so there was a question about that. Other than that, it's just the same stuff every single time. Oy vey. Okay. This is like my favorite question. A bunch of the other AWD. This guy actually asked about other stuff. So I listened to this one time before I do this. So here's just your real time shit right here. Okay. So this is Colin from Baird.
Thanks for taking the questions. I guess first off, with respect to the international segment and the progress in both revenues and margins, I was hoping you could add maybe some color on the drivers of each of those and the sustainability of the improved efficiency in those markets. And then, Andy, you mentioned Kuiper. We haven't heard.
These guys, tricky bastards, I tell you. They say one question again, and obviously they haven't gotten the memo to cut that down. But they asked two questions in one question. Just clever.
As much about that of late. So
Kuiper. Mel Kuiper.
Maybe if you could review where things stand relative to next year's launch target, timing of the service rollout, and maybe any perspective you have on the longer term ambitions for the satellite network. Thank you.
Thanks, Colin. This is Brian. I'll start with the international segment question. So, very strong quarter for international segment, both on revenue growth and also on operating margin. Operating margin was up 320 basis points year over year to 4%.
God, do you remember the days when international was just sucking, just absolutely just sucking money? Just they couldn't find a profit if it hit them in the ass. Like they just were dying, but not anymore.
0.1%. And if you look, that's the continuation of a strong progression we've seen quarter by quarter over the last 10 quarters. In total, we've seen an increase of close to 700 basis points during that time period. So really, it's a tale of,
Go chat or go Google basis points. All these guys use basis points. I mean, it's just a little formula. I don't really know how to explain it. Go look it up. They did well.
Two pieces of two segments, sections within international. One is the established countries like UK, Germany, and Japan, already at similar margin profiles to the U.S. So we'll, as they continue to grow, their contribution to profit will grow over time, and that's what we're seeing. In the quarter, we saw strong productivity in our transportation network in those countries, much like we saw in the U.S., and that's led to higher units per package and faster delivery speeds at lower cost. So again, the theme of lower cost to serve and also increased speed and better selection for
except in Seattle. No, I'm just kidding. I'm kidding.
Customers continues to grow internationally as well. In our emerging countries, we're pleased with the progress we're making there. We've launched 8 countries, of course, in the last 5 years, and they're all varying degrees of upfront investment and different point in times in there.
How's India going, Brian? How's India? Okay, how's Australia going? How are those two going? All right. I want some deep dive on that. Okay. Because I don't think it's going as well as you want it to.
Their journey to profitability, but they're all making very nice
journey to profitability. Man, pre-rev, pre-profit. That's what I like. I like terms like that. The journey to profitability.
improvements quarter over quarter in growing selection, adding Prime members, and expanding our customer offerings. So I think what you're saying again is sustained improvement in those areas. Feel very good about it. The established countries are continuing to grow and develop and very much look like the United States. And the emerging countries, again, are all very different stages of growth right now.
On the Project Kuiper question, so Project Kuiper is our low Earth orbit satellite.
Oh, we're back to Andrew, as I like to call him. He's going to handle the Kuiper situation, right? And again, he throws shade. He throws a bullet right here.
Installation that we're putting up and launching. And, there's 400 to 500 million households worldwide who don't have broadband connectivity. And it means they can't do a lot of the things we take for granted, like education online or business online.
Like doing stupid podcasts from your home office. He's right. People can't do this nonsense.
Online or shopping or entertainment. There is really a digital divide, and it's much needed. And it's also true for enterprises and for governments that they have assets or needs to have visibility or connectivity that they can't get today, given the lack of broadband in a bunch of places around the world. So there's a high need. I would say that as we get our constellation into space, there will really be two players that have what I would consider the modern technology in low Earth orbit satellite. One is the incumbent in the market today.
The incumbent. Hello, Elon. The incumbent, which has got a major market head start, which is not that's rare for Amazon.
Second will be Project Kuiper. I think that we will have a pretty meaningful differentiation here in performance. If you look at the performance of what I expect on the uplink and downlink, I think Project Kuiper will be advantaged. I also
wait for it. So he thinks it's not only faster and better, but wait for it.
I think the pricing is going to be very compelling for customers.
There it is, the pricing. Of course, he's going to undercut the shit out of them. Good. Starlink, say goodbye to good margins, okay? Because this guy's going to come in and chop your legs off.
And then I think if you think about the three key customer segments who want low Earth orbit satellite.
This is cold-blooded kind of shit right here.
Consumers, enterprises, and governments. We have very strong relationships with all three customer segments, given our consumer businesses and our AWS business.
I mean, if you're already buying everything else, why not throw in a little satellite?
And I think if you think about enterprises and governments, a lot of what they want to do when they take the data down from space is they actually want to put it into a cloud to do analysis, analytics, and AI and various operations on.
Yeah. See, they already have the flywheels cooking, baby. Man, the spokes are flying. So why don't we just go get your connectivity and get your stuff? We want to pull that stuff down, but where's it going to go? Oh, no problem, Mr. Customer. I'll just put it in this bucket. I'll put it in this bucket over here and make more money.
Top of it. The fact that Project Kuiper and AWS are so seamlessly connected is very attractive to enterprises.
Seamlessly connected. It's very attractive, Andrew.
Enterprises and to governments. And I'm kind of amazed. We haven't launched Project Kuiper yet, but the number of enterprise and government agreements that have been signed already to use Project Kuiper is impressive. So
that's a little flex. Do you hear that? He knows Elon's going to hear this. He had a little humble flex right there. All right. He's been hitting the gym. He knows how to flex. That's a little flexible.
We're working very hard to get the satellites into space. We have some delays with some of the rocket providers, but we have most of the available rocket launches over the next couple of years, and we're
We have mostly available rocket launch. I'm just is this like Avis? I mean, is this like a rental lot? Like you go in, there's rocket launchers where you're just like, hey, do you have my reservation? Do you have my reservation? What? You don't have a rocket for me? I called and you said you had a rocket for me. This is hysterical. I had no idea there's rocket reservations. Okay, there's rocket launcher reservations. Don't worry though. They went to Open Table and they've reserved a table for 300.
Very helpful to get the service into commercial beta later this year, early next year.
Okay, that's got to do it. It's just got to do it because I can't stand it anymore. That's it. That's the wrap up, kids. We love it. Hope you did too. I mean, I missed a bunch of stuff. It's mumbo jumbo, but I'm doing this. It's hot off the presses. Hot. If you want great numbers, go to Russ Derringer and Strattably and Dirkitz will do it. All the big kids, all the big brains will do it. Thanks for tuning in. Remember, we got great episodes coming out. Please subscribe to the YouTube channel, all that jazz. Because why? Because people matter, and you've been listening to Always Off the Rant. Bye-bye.
Hey there, this is Haley from Quickfire, and they want me to read this so you know what this podcast is part of and how to find out more if you want. Always Off Brand is a production of Quickfire LLC and a part of the Learn and Laugh series on the Quickfire Podcast Network. For more information, go to quickfirenow.com. Have a good one, and thanks for listening.